Praise the Lord, everybody. We are back. Anthony Miles, your Christian Reverse Mortgage Answer Man. We are here every Wednesday at 10 a.m., 1450 WL Talk Radio AM and 95.9 WL FM. So either got AM, FM, doesn't matter. We are here, same time, same place, every single Wednesday at 10 o'clock. Number to call, 1-800-952-PRAY, P-R-A-Y. 1-800-952-7729. It's a very valuable phone number to have. So definitely jot that down. You will not be on the air, so you won't be spreading your business. Don't worry about that. You'll call me off the air, and you'll get no harassment from me. You can call. Sorry, I get a lot of words jumbled up today. You can call me and never worry. You can say, hey, I want to ask you one question that I'm hanging up. It happens all the time, and I'm okay with that. I'm not here to press you to do something. I'm here to inform and educate you to make sure you don't get taken advantage of. The reverse can be a blessing, but it can be a nightmare if it's not fully explained to you. That lack of information is on purpose, and we're going to get into that right now because we're talking about the fixed rate reverse or the adjustable rate reverse. In the fixed rate reverse mortgage, remember we were talking, it's a single disbursement, not a double disbursement. Remember we talked about how they changed the rules in 2013, and any proceeds you received, they were going to split up in two different payments for you. One at closing and then one 365 days later. But in a fixed rate, because by law it's designed to get a single lump sum disbursement only, then there is no year two. So for that example, you received $100,000. That's what you were eligible for. In the fixed rate before 2013, you got that full $100,000 put into your bank account. Maybe you didn't need it all, didn't matter. It was automatically put in there without your choice. But now, after September 2013, with the fixed rate reverse, you're eligible for $100,000, but the government breaks that up into $50,000 at closing, $50,000 in the second year. But in a fixed rate, it's a single lump sum disbursement. There is no second disbursement. So you only get 50 out of that 100,000. And many of you are not aware of this. If you did a fixed rate after 2013 and it was your first time doing the reverse, more than likely you got, for lack of a better word, screwed. All right? You really got taken because you were not fully informed that there was money left on the table that you were not eligible to get because you were purposely put in the fixed rate. When a loan officer comes to somebody's home with that mindset of putting them in the fixed rate, because they were getting paid more to do that also, by the way. The bank was still paying them like you were getting the full $100,000, but you were only getting $50,000. But the loan officer was being compensated by many lenders back then as if you still got that $100,000. So their compensation based on what your loan amount was, how much you received, was based on that full $100,000. But you only got $50,000. And that other $50,000 sat in the house and it got eaten away by the interest that got charged every single month. So when the loan officer came out to your home, they purposely would hide this. One of the and that's if they explain the pages. A lot of people don't. They just go sign here, sign here, sign here. If you're one of those people and you do that and you sign there and sign there and sign that, that's no-no. That's a no-no. If somebody's distracting you and is not fully informing you and educating you and explaining everything on that page, do not sign. Or you can always change your mind. Take it to, I don't mean to say an attorney or an accountant, because if they don't understand reverses, they're going to give you horrific information. Okay, they can tell you the legality if the reverse is a scam or not, okay, but they're not going to be fully informed on what's best in that sense. That's why it's better to call FHA and HUD or call me. You don't have to go through me. If you're working with somebody else, I'll still help you out of the kindness of my heart because I don't want you getting scammed. That's what it's all about. I'm going to be tremendously blessed by the Lord in the future, so it doesn't matter. I'm not worried about that financial gain. I just don't want you being taken. So a loan officer would come out to your home, and there's a page on there called the Reverse Mortgage Comparison page, and it breaks down the different kinds of reverses, the fixed rates and the adjustables. And you clearly would have seen if they showed you a fixed rate lined up in a column next to the adjustable rate, that you left money on the table, because at the very bottom it would say available proceeds, and it might say 50,000, and then it would say year 2 proceeds, NA, not applicable, not gonna happen, no chance, no way, in a fixed rate. But in the adjustable, you would see 50,000 in the first year, 50,000 in the second year. But they don't point that out, because that means I'm telling the truth, and that means they're going to make less money, and they really don't care about what's best for you. That's one huge, humongous negative about the fixed rate, that it leaves that second year money on the table for the bank to gobble up. The bank doesn't care. They don't want you knowing the difference between the two, and they'd rather you be in the fixed rate, because the second reason is the fixed rate is double, almost double the interest rate of the adjustable. How do I know this? Because my mother's been in a fixed rate since 2009, and we did not know better. We thought fixed rate, you got to be in a fixed rate. In any mortgage, right? It's the best thing for you. No. She's been in double the interest rate than other people who did it the same time but did the adjustable. Her balance has climbed twice as high because it's compounded interest at double that interest rate. And it has sucked like a vampire every bit of equity out of that home. Yes, the adjustable can go up, but yes, the adjustable can go down. And with the uncertain times we live in, especially right down the street from me in the White House, we don't know what's going to happen. But it's scary, and we don't know what's going to happen. We have our thoughts and our feelings, and it's scary. Could be good. That'd be a blessing. I'm a little worried, though, okay? I'm a little skeptical, because if it's bad, it's going to be really, really bad. But that does mean that your interest rate would go down in the adjustable. But if you got the fixed rate, it would stay double. So remember that. So this is something the bank hides from you, because they want your interest rate to be higher. They want you to be in that fixed rate because they don't want you making a payment. They don't want to let you know to make payments in your reverse. But even if you are, which I highly recommend, making payments in a reverse mortgage, you still want that fluctuation of the adjustable, because you want to ride the lows while they're there. Because when you make a payment on a reverse mortgage, you have just a set interest that goes on there. It's not like a regular mortgage where you're making payments, okay? And then what happens is, 800's going towards the interest in the beginning and only a couple hundred towards the principal. No, it's a flat rate. So if 500's going on there and you're making a $1,000 payment, 500 then is going towards the principal, and people are able to pay off their mortgage much more quickly in a reverse than a regular mortgage. But in that fixed rate, you got double that interest going on there. You leave money on the table that was rightfully yours, that the bank and your loan officer didn't care to tell you and let you know about. Good news is this. If you did a fixed rate after 2013, okay, if you did one after 2013, you can correct it like I've done for some of my clients. They weren't my clients before. They were taken by somebody else and scammed with that fixed rate. But I was able to refinance it for them and get them a good portion of that money that was left on the table. Can't get you everything unless that appraisal is much higher, because interest has been already calculated on your loan. If you've got an adjustable rate, don't think you're sitting pretty, because if you did it in 2005, 6, 7, or 8, or 3, 4, 5, 6, 7, or 8, you're in what's called the monthly cap 10, which means in the fine print, your interest rate could go 10 points higher than what your interest rate started at. So if you did it in 2006, and I know interest rates back then were like 6%, then your interest rate in the fine print can go as high as 16. You might only be at 2.4 or 2.5 now, but with, like I said, the guy down the street in the White House, if interest rates go up, that thing could go as high as 16%, and it would, based on the fine print. Good news, you can refinance it and get into the cap 5, which means only 5 percentage points above what you're starting at. So refinancing your reverse could be very beneficial whether you're in the fixed or the adjustable. If you're in the fixed interest rate, what it means for you is this. You can get out of that vampire type rate You can cut that interest rate, cap it at a lower cap, so if interest rates do go through the sky because of you know who in the White House, then you're protected. If you're in an adjustable rate and you did it a long time ago and you're at that cap 10, you need to get in that cap 5. If you live in the District of Columbia, I will refinance your reverse mortgage at 0 closing costs. No upfront fees, no back end fees. Maryland, it's a little bit harder. Can't guarantee that nowadays because, again, the guy down the street in the White House, since he got in there, our pay has drastically been cut because of the uncertainty. But we still get paid enough to where I can still credit a good amount of those costs and can incur them myself. It's 100% legal. It's called a broker credit. You hear people advertise, hey, you get $1,000 back at closing costs. I'm not mentioning any names, but I'm going to tell you, it should be a lot more than that credited to you. And that's what this show is about. Giving you free information like we just did with the difference between the fixed and the adjustable. It's still a better roll of the dice with that adjustable. You've got that 100,000 for both years. You didn't lose 50 of it because of the fixed rate only allowing you that 50. There's so many things people don't know about the reverse. It can be a tremendous blessing, and that was just one topic. But we get into this every week. Make sure you look at my Facebook page. Anthony Miles, the Christian Reverse Mortgage Answer Man Facebook page, or call me at 1-800-952-PRAY, 1-800-952-7729. I'm not kidding. These seminars are going to start up again very soon. My sister's helping me. So your senior centers, your churches, I want to be there to help you out. To God be the glory as always. May people see Jesus in your eyes. It will make a change and make a difference that we need. God bless everybody. Amen.